So Igor, you caught this. How many that we covered yesterday? How many pips did you make, or how many pips are you in profit right now? Oh, how to count the pips? Well, how do you answer that one? Where'd you buy? Yeah, where'd you buy? I guess is the most important thing. You must be from another industry. And then, so Igor, you did well, and you're short USD CAD since yesterday, and still on it. Congratulations on that one. And how many? Yeah, how many pips have you got? I like hearing good stories, success stories. Yeah, you almost got. Yeah. Anyone else doing really well? How many pips? Give me some pips, man. Anyone else doing all right? Well, 100 pips, Igor, is 1 penny. So if you bought at 112 and it went to 113, that's 100 pips. So Ken up 62, Simon plus 40, Wilf up 120, Oscar's up about 80 today. Congratulations, guys. That's really cool. 62 and up, says Ken. Yeah, right on, Bubba. Well, good job, guys. Awesome. Now, remember, the market giveth and the market taketh away. It has nothing to do with you. So you were great today. Don't worry about it. You could suck tomorrow and give back twice as much if you're stupid. So to prevent that, stay small, stay humble, focus on the long term, like I always say every single day. But tomorrow, before you start trading, I want you to actually say something. I want you to say it out loud, and if you feel stupid, then get over it. Because we know the other way doesn't work, so do my way. And say, today I will not give my hard-earned pips back. Say it out loud. Today I will not do anything stupid and lose a lot of money. Today I will attempt to be the perfect trader. Today I will be patient. Today I'll be focused. I buy at support and I sell at resistance. My losses are small, my wins are big. I mean, say it out loud. What's your problem? Oh, I feel stupid. I don't feel stupid with all your money. All right, so seriously, I would say it out loud because it's a cliche because it happens all the time. You have a big day, you make a lot of money, and then you give it all away and lose a whole bunch. So to change that, okay? And it's a cliche for a reason because it happens all the time. But cool. So anyways, I guess we should get going. What day is it? It's Thursday, June 4th, 2015. It's 7:41 a.m. New York time, a couple of hours before Wall Street opens. We're currency traders, so let's make some money. As soon as this video is done, I will upload it to youtube.com/c/TradersWay. Please leave a comment. The videos are typically an hour and 15 minutes long. I have a combination of technical and fundamental analysis, sometimes trader psychology, sometimes a trade of the day, sometimes a tip of the day. But nonetheless, that's a lot of information, and hopefully you have a whole 22 seconds to pay it back by leaving a comment. Would you do that, please? Thank you. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. TradersWay, by the way, is an ECN. Allows you to trade Forex, energies, metals, indices, and binary options. Accepts clients from all around the world. Let's get going. Thank you for being on my team. So, who are we talking about? Igor, right? So 160 pips for Igor. 160 pips is really good, Igor. Congratulations. Move your stop and lock in some of that profit, huh? Let me remind you that trading and investing is risky and not appropriate for everyone. Your performance, good or bad, does not predict future results. Like I said, you were a hero today, you could be a zero tomorrow, and it does happen. Happens all the time to the best of us. The secret to success is not getting rich quick. The secret to success is small, staying humble, focus on the long term, and never risking money you cannot afford to lose. Okay. I'll show you what I did. This is Euro USD. This is the move at, I don't know, 2 a.m. my time. Let me zoom in. We were sort of in this process here. Where's my drawing tool? Oh, no drawing tool. Hang on. Let me fire up the old drawing tool. But you can see just before that red candle, it's this little doji's where I woke up to make my trade of the day. Nothing quite happened. Fine. And then the next candle, red. WWD. What would Wayne do? Well, it's not as easy as you'd think, but this is what caught my eye. But we were still up here. Red candle came down. We touched it. Okay? Now, it looks easy now. If you were there, it wasn't that easy, was it? Let's go to a 15-minute chart. And this is what it looked like at the time. Okay. And if you were only looking at small time frames, you would have got caught, right? Because you were thinking about selling in here, right? Wait, it looked just like that. That's not it, is it? Hang on. Sorry. Like I said, I didn't get much sleep. Hang on. It was a very similar pattern to that. Hang on. We were like this. All right. Very, very similar pattern to the one I just drew, but obviously that wasn't it. It was in here. Okay. So this is what Asia was doing, kind of this kind of stuff. Okay. Then it drops down. Okay. So we're talking about this area here now. So let's mark that with a kula. Okay, so we're talking about that area, and the consolidation was in here. So let's zoom in now. Will allow me. Might not allow me. Hang on. Let me turn that off. Okay. So it's pretty easy to get trapped in this. It's moving sideways, moving sideways, moving sideways. That looks bearish, doesn't it? To some, if you're only looking at small time frames. Because now it's been falling for an hour, lots of steady red candles, right? Oh yeah, let me get rid of PSAR, sorry. I tend to only see what I'm looking at. Okay. And so if you were only trading 15 minutes or 5-minute charts or scalping or all that kind of stuff, you could have gotten this lower low trap, right? particular if you're not using oscillators, particular in a lot of different things. But what direction is the trend? Seems like we made a higher high yesterday, right? So what's the only thing you could be doing technically here? Remember, I like to be simple. There's only one thing you can do. Right. Well, we don't know where we're going to buy, right? But the general idea is to take this across as a guide. Oops. Get over there. Okay, as a general guide, I'd like it to stay above that. And we're looking for a drop. Where? I don't know. Things that might be important. Let's see. Support or resistance. So that could be support. How about the cluster of the daily central pivot point 3A2 Fibonacci retracement? That looks pretty good. Okay, and on this time frame, that's pretty much it. On this time frame. Okay, but that's fine. But that's what you'd be thinking, right? So let's say in a textbook easy peasy world, okay, we had a low, then we had a higher high, then we would have a higher low, and then we'd have a higher high, right? That's the plan. That's the strategy, right? Okay. So this is why, chasing price, chasing this stuff is fool's gold. Now, I'll tell you what, though, if you were trading Asia, it might have been worth a shot because it's a different setup now. Because you're way up here, you had a triple top, and it's rolling over. And that could be the London Open, right? But I find that the losing traders, they're not trading Asia short on a cycle. They're selling low, right? They're selling low. You can sell high all day if you want, but it seems to me most people would have done it 4 or 5 hours late. And we know that that's a typical setup for a losing trader, right? And it could have been me. It could have been you. But more often than not, it's when you show up late and you're like, oh man, look at that, it triple topped. It's been falling for 2 hours. Short, loser. But we know it's true, right? Don't you turn your back on me. We know it's true. It does happen to us, but that's when we tend to lose money. Who's in control in that situation? You or the market? Ask yourself that. I do this all the time. I talk to myself when I trade, not out loud generally, but I will if I have to. But I ask myself, what would Wayne do? And that's the funniest thing, because what I'm asking myself is, if I was coaching, would I behave this way? You see what I mean? If I was coaching and, 60 or 70 people are watching me, would I make this trade? And if the answer is no, forget it. Okay, so anyways, so that's what piques my eye, is that it's an uptrend, so I'd rather be buying, unless you get like a real drop or something, and then, I'm going to play this. Okay, but that hadn't. So anyways, I would have thought, okay, we know now it didn't fall all the way, but I would have, my sweet spot here, typically it's the 382 to 618. But then you'll notice we have the daily central in here, so I might want to include that. And then we have just one, so instead of a 38618, it looks like it's more like a 3070 kind of day. Somewhere in there. It didn't even make it that low. But that's what I would have been thinking. Okay? But this did catch my eye. So this tells me within the hour I will be buying. Because, it doesn't take that many candles to turn this over, does it? Okay. So I'm already preparing. This says I need to set up an ambush. And that's where I drop in my 5-minute chart. But what? There was something that said it may not make it down here and that I should consider buying sooner than later. And you can't see it. Why not? There was actually something that said it's time to go. It's hot to go, HOTTOGO. Time to give it up. Time to give a shot. 21 where? Aha. Different time frame. Okay. Hang on. It was the hourly. Where are we? Hang on. Let me put this back to catch up to real time. All right. So here it is. I bought right here. And my target was here. So I was long at 47. I was a little late getting in. I waited for a confirmation somewhere, so it wasn't the best entry. It could have been 40 instead of 47. But anyways, and the target was 47. That's it. So, I was looking at this and it said Zeus. That could be a buy opportunity. That could be it. It's almost the central. It's almost the 382. So I had my stop fairly low to begin with. And then right at the beginning of this candle, I moved my stop to plus 10, then plus 50, and then out for 100. That's the step-by-step. Husker got 85 on that. Congratulations. No, Mike, no, it's not me. It's not me, Mike. It's just the market. But thank you. All right, so let's take a look at Australian trade balance. Igor says, now it's definitely going to go down. Well, I didn't say anything like that. See, you have to take the guessing and the thought process out of it, guys. If you're going to use technical analysis, stop thinking. The worst thing in the world is to say, oh, well, it can't go any higher. Well, it can go higher. It probably will go higher. So until it makes a series of lower lows and lower highs, be a bull or get out. You're not the one that needs to reverse the market. Let a central bank do that. The fifth wave to the other, blah, blah, blah. I don't care how you come up with a conclusion. Your job is not to guess. Oh, but the fifth wave, you know what? Your job is not to reverse the market. Let somebody else reverse the market and then take the trade. Okay? Now you can prepare for it based on your Elliott wave analysis. Okay? But you don't have to be the one that reverses the market. Okay, let's identify, would you call that previous support? Signals? I don't know what a signal is, Mike. Okay. So Mike, if you're a bear, that would be resistance. You'd prepare to sell or you wouldn't trade. That's it. There's no signal. We're at a midpoint cycle level, 77.50. Cool. The trade balance yesterday for Australia was poor. Guess what? It sold off. I think we should identify this level here as support. And I think we should identify this level. It used to be resistance and it was support again. So you can see lots of easy trades here. Because even though this failed to make a lower low, that was an easy short. And then once it made a higher high, that was an easy buy. The only thing is we're stuck in consolidation. So ask yourself, where's the longer term trend? And you need to pick a team. Bulls wanted to buy that and wanted to buy it a long time ago. They didn't just make it up on that double bottom. Right? They're not winging it like some people. Okay? So you have to pick a team. And I don't care how you do it. I don't care. The methodology that you use is your alpha. I don't know what's right. I don't know what's wrong. Flipping a coin is fine by me as long as you make a decision. Okay. So let me now remove these. Just wanted to point that out. So what do you think? What does the daily chart tell us here? By the way, let me mark up some support and resistance. Bum, 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 bum. Do, 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 do. Do, 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 do. Do, 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 do. Do, 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 do. Do, do, do. Yeah, I guess it's this. Do, 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 do. Do, 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 do. Do, do, do. All right. What's your plan, Stan? Making the music abusive, but you can't do what you know. Well, this suggests that wants to go up a little higher. Okay. Something like that. It could be here. So what created this giant green candle? I want to make sure you're paying attention to the fundamentals. Explain this to an amateur. Why did that green candle appear? Some news. Blah, 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 blah. You're invited to speak on TV tomorrow to talk about the Australian dollar. What nonsense do you babble out of your mouth? Better economic. Come on, guys. Can you be specific? Interest rates. What about interest rates? Triple bottom, not 8. By the way, if you even mention technical analysis on TV, they'll go to commercial and they'll never invite you back. Just a heads up on that. Right, they're not talking down the value of the Aussie dollar, nor are they giving forward guidance that suggests lowering interest rates, even though they're probably lying, but at least we know they're lying. But it is a change, okay? It is a change. So that might be as low as interest rates go in Australia, is basically what they're saying. Fine. So if that would produce the bottom. Boom, huge green candle. Great. So if you were a bull now, and you're not trading the day chart, you're trading the hourly chart, WWWD, what would you do? That's not WWD, WWYD. What's your job, bull? You buy the dip, 50% retracement, you're long and gone. That's what I'm talking about. Especially off the double bottom. It's not complicated, is it? You bought a 50% retracement after a change in policy at the central bank. So like I said, you don't have to be the one that does the reversing, ladies and germs. I'm not suggesting you should be the one buying down here and reversing the entire market. Okay? But I am suggesting that you needed to buy here. Faux show. And if you're not doing that, either not a bull or you don't know what you're doing. That's all. Don't get upset at me. At least you're listening, right? But it's one or the other, right? You're either not a bull, or well, I guess, or you're not watching the pair. But then you're not a bull in the pair. But you know. But that's your buy zone. That's what you should have done in your analysis overnight. If you were a bull. Man, I can't wait to buy the Aussie dollar. Remember, you should be able to, while you're booting up your computer, you should already be saying to yourself, I can't wait to buy the Aussie dollar. I hope the retracement showed up. If you're not doing that, you don't have a plan. If you're sitting down in front of your charts looking for a trade, you will lose. If not today, eventually. So you need to change your behavior. Okay? It's called having a bias. And your plan is to buy a dip. Cool. Yeah, bears could sell it, right? See, remember, you never know if you're going to be right or wrong. I never know if I'm going to be right or wrong. I do this every day for the last 10 years. I never know if I'm right or wrong, but I can tell you what the technical analysis is, and I can give you a good idea what the bears are going to do, and I can give you a good idea what the bulls are going to do. So, if you happen to know if you're a bull or a bear, now you can put together a tactical trade entry plan. But the strategy will already be set. So, for example, if you're a bear, you're going to sell either the 3A2 or the 618. Where's the confusion? Right? It's one of those, right? That's all. You're going to sell the 3A2 retracement because you've studied the charts. There's resistance there, plus it's a 3A2. And the next one's up here. If that doesn't work, you have a trade plan set to go here. Right? And again, if you're a bull now, you love this change in central banking policy, don't you? And you love the higher high, and you set up the higher low, so there's your buy zone. So I can tell you, bulls are either going to buy there, or they're going to buy this bottom. So we kind of have like this for them, which could be both. You see how if that happens, both bulls and bears get what they wanted. And that happens a ton of time. So you're a bear, you get in, and this drops from 78 to 77. So you pick up 100 pips. Then it goes from 77 to 79, and then from 79 back to 78, and whatever, right? You see that? Bulls take it up to the bears sell zone. The bears sell it down to the bulls buy zone. The bulls buy it, goes up to the bears sell zone. The bears sell it down. Bulls would buy it here in the role reversal. If it goes lower than that, then I would set up a lower high and say that the bears are in control. All right. So like I would buy it here to have it go up, but if it went low, now we have a lower low. So now my job is to set up the lower high on the role reversal, and I'd be down here, and I would change directions. It's just technical analysis, guys. That's all it is. Sorry if I sound grumpy. I'm not. I just haven't slept very much this week. But that's the life of a currency trader. No one's complaining. I just hope I'm not coming across mean. It can happen. I'm just trying to cut through the fluff. Trying to just cut through all the noise, get into your brain. I want you to hear me. If emotions are created, well, at least maybe that gets stored. Yeah, so the trade balance was bad, right? That's right. So the trade balance stuff, or well, let's go back to the bear. The bulls are already set, and if you're a bull, you would probably look on a smaller time frame to do this, right? Because you're just fulfilling on a smaller time frame the same plan. So, for example, and this is what you'll get better at over time. If this is what's happening on the 1 hour and 4 hour, okay, just a simple straight move up, over a series of a bunch of candles, right? Okay, let's say that happens over the course of days or something. What happens on a 15-minute chart to fulfill that? Do you think you'll get just a straight shot of green candles? No. So we're going to have a series of higher highs and higher lows, correct? Okay. So you would get high, higher, low, higher, high, higher, low, higher, high, higher, low. Then, right? And then what? A three-wave correction for you Elliott wave dudes. And then what? Higher, high, higher, low, expansion wave, retracement. Okay. And maybe that, or even a retracement of this whole move all the way back down to here. And then finally the move up here. Okay. All in a 15-minute chart. And it's just, expansion, Fibonacci, expansion, Fibonacci, expansion. Here's the retracement, maybe through Asia, then expand it through, and then the big through New York, and then Asia takes it up and expands out here. Yeah, it's 3 days worth of 15-minute charts. But generally speaking, all it did was go up. On a higher time frame, let's say on a daily chart, what does it look like on a daily chart? Oops, look at this. Green candle, right? Small wick. But generally speaking, green candle. Then it wicks down again. It's day three green candles. That's all it looks like on a daily chart. But yet on a 15-minute chart, it's up, retracement, up, retracement, up, retracement, fade, up, retracement, up, retracement, up, retracement, fade, up, retracement, close, done. 3 days. 3 green candles, easy. Okay? Ernesto says he needs a bad number, blah, 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 blah. Well, that's where your fundamentals come in too, right? And that's important. Now, let's say this is a bearish market. How would you get 3 red candles? How would it behave? And you can plan it in exact reverse. Okay? Let's reverse the whole scenario now. So let's say, generally speaking, that you can see that this is sort of a channel. So what if we have this today? Oops. Or over the course of the next few days. Let's say down for 5 hours, up for 4 hours, down for 5 hours, up for 4 hours, or whatever, something like that. Well, it's exactly the same thing down. And what happens if and you bought it on this dip? Well, you either make a little bit of money or you lose a little bit of money. But you're wrong. So what are you doing? Are you buying here? No. Are you buying here? No. Are you buying here? No. When it comes down, are you buying here? No. Are you buying here? Yeah, maybe. Put your stop here. And if it fails, oh, you lose a little bit and you probably stop. Because you can only buy at support, right? But that's where proper trade management is important. This is why your losers should be a lot smaller than your winners. Because you can be wrong like twice a day, right? You could buy it here and maybe lose money. You could buy it here and maybe lose money. Both are buy zones. So you have in a row, let's say that's a total of 66 pips lost today. In your first trade tomorrow, you make 99 pips. See what I mean? 1 winner is worth 3 losers. That's how it should be. Because you're wrong a lot. Sorry. Right? You could be wrong, what, 30 or 40% of the time. Shouldn't matter. Your winning percentages is a loser's game. I've studied certainly 1,000 traders. I mean, millions and millions of trades on spreadsheets and stuff, right? And I've seen all kinds of traders. The worst ones are the ones that have a high winning percentage. Because it takes you longer to fire them. But you shouldn't have hired them in the first place. But they just waste your time. What? Inevitably, their winners are small and their losers are big. So they win 85% of the time, but their losers are wipe out all their winners. Like in a morning, they lose 2 weeks worth of money. But they have an 85% winning ratio. But there's a reason for that. They never get out of their losers. And as soon as they're up plus 5 pips, they take profit. Oh, they want to keep the big winning percentage. Couldn't care less. There's 2 things I laugh at. One, hey, Wayne, I win 95% of the time. Okay, you're a loser. I'll never hire you. Forget it. It just tells me you don't know how to take a loss, which means if you don't lose all my money this month, you'll lose it all next month. I won't be able to sleep at night. Forget it. You're fired. Not interested. And the next one is, Wayne, I make 30% a month. Good. Not interested. You're fired. Because you're over leveraged. Igor's like 95% of the time he loses. Not interested in that either, right? But I want to know that you can take a loss. Show me that when things go wrong, you have the discipline to get out. We talk about patience and discipline all the time, don't we? Well, what's hard? Well, there are a couple of things. When you have a winner, not to give in to your emotions and take your profit because oh my gosh, I have 50 pips profit. Yeah? Well, what if it goes up 150 pips today? You'd be stupid to get out now. You did all the hard work. You're in the trade, right? So it takes discipline. But also, when you're down 50 pips and you're like, oh, well, I'm only 15 pips away from that next level of support. And it just, and then, oh, well, and then pretty soon it's a big loser, right? No, man. In my book, I actually say that you need to take pride in your losing trades. And I'll tell you, once you're a successful trader and you sit here day in and day out, day after hour after hour after hour after hour, chart after chart after chart, crisis after crisis, interest rate decision after interest rate decision, job report after job report. I mean, it's all a blur. And when you make money, it was because you were supposed to make money. Think about it. When you enter a trade, you expect to make money. You're only shocked when you don't. You're like, oh my God, what happened there? Right? But so what I'm getting at is what feels good is when you're in a trade that doesn't go the way you thought. You're like, oh man, I wanted that to go up and it's coming down. I really want to stay in this trade, but that's not the trade I planned. It's not fulfilling the price action that I had in my plan. I mean, there's still some hope here, but that's not what I wanted to happen. So I'm going to get out for a 22 pip loss. So you take your minus 22. You still had lots of support. You had tons of budget to hold that trade, but it just wasn't the trade you wanted to be in. So you take the loss, and 15 minutes later, you would have been down 50 pips. And I'll tell you what, not losing those extra 20-something pips feels so good. Because you have the discipline. Who cares about your winning percentage? Who cares? Oh, but I had, look, your trade plan was for it to make a higher high, higher low. Why is it going to lower low? Get out, dude. And you feel so good. You're like, oh, I have the guts to get out of that. And I'm in a winning trade because what happens is you stare at your losers, don't you? You're down 22, now you're down 28, and oh, now you're only down 22 again. Oh, now you're down 30. Oh, you're down 26, maybe it's coming up. Oh, now you're down 33, and you're just staring at that, right? However, there is a trade that you're supposed to be on that's making money, but you're not in the trade because you're staring at the loser, watching grass grow, or in this case, watching grass die. You're like a frog in a pot of water, and it's getting warmer and warmer, and you just don't jump out. All you have to do is jump out of the trade. Just jump out. What does a frog do? It stays in the water until the water boils and he dies. Are you a frog? I'll give you another funny example. I used to live in San Francisco, and I'm down by the wharf, right on the water there. In fact, I was at a farmer's market. I got a nice sandwich and everything, and a beautiful coffee. And it's California, so it was a rice milk coffee. And so anyways, sitting there sucking down my latte and eating my grilled salmon sandwich, and and I'm sitting right on the pier, and there's this like this old Chinaman, and he's fishing. And I'm like, look at this guy. He's got long hair coming out of his moles and everything. I mean, he could have been 1,000 years old, right? But anyways, and he's got a stick. He's got a stick and a long fishing line on it. Not a pole, a stick. Okay? And a long line, because the pier's got to be 12 feet above the water, and then how deep is the water, right? I mean, it's quite deep. But so it's this long fishing line, and at the end He's got like a tiny little hook that you couldn't catch a minnow with, and a piece of hot dog, right? Just just a tiny piece of hot dog. I'm like, look at this crazy old man. This is great. Sucking down my latte, eating my $9 sandwich. And I'm like, this is great. This is better than TV, right? So I'm like, watch this idiot. Of course, he's not an idiot, is he? So anyways, he drops the hot dog down in the water, and he lets the line down 30, 40, 50 feet. It's going way down there. I'm like, what is this guy going to catch? Like, if there's a fish down there, it's going to weigh 100 pounds. This guy has like a minnow hook on it, and it's a hot dog. He doesn't even have a fishing rod. He doesn't even have a net to take a fish out, and it's going to weigh 100 pounds. Even if you can get up there, there's no way you can carry it. And so he's just sitting there with a bowl, and he's squatting. Doesn't have a chair, no nothing, right? So anyways, he drops it down there, and he waits maybe a minute, and he starts winding it up again, rolling up the string around his little stick. And I'm like, this is so stupid. This guy is an idiot. Anyways, he's rolling up, and sure enough, the hot dog comes out of the water. Guess what he's caught? Anybody got a guess? No, he's got something, and he's got a bowl, and he's going to put it in there. Well, after watching him for, no joke, a half an hour, he's got this bucket. It's full. He caught 6 or 7 different things. What did he catch? A crab. Thank you, Abdul. He caught a crab, and that crab is hanging on the hot dog, and he will not let go. The hot dog was at the bottom of San Francisco Bay, 30 or 40 feet below the water line, and then there's like another 25 feet of air before you get to the street level, because we're up on this pier, right? And the pier is way above. So anyways, the crab is holding on for 50, 60 feet, and he will not let go of that piece of hot dog. That is his piece of hot dog. Well, it's a losing trade, my friend. And that's you. Stubborn as can be. Even if his life depends on it, he is not let going of that hot dog. And sure enough, the old Chinaman carries it all the way to the street level, pulls him off the hot dog, throws him in the bucket, drops the same hot dog down, waits 2 or 3 minutes, pulls it up. Sure enough, there's another crab, and he's hanging on, and he will not let go. Whoop! Throw him in the bucket. Next. Filled the bucket up, 30 minutes, and left. And I'm like, who's the idiot now? About 10 crabs. You should be on a different trade, my friend. Okay? So let me put it in more real terms here. If your trade plan was this: up, down, buy at roll reversal, okay, and have it go up here. What do you do if price is here and you bought here? What do you do if price is here and your trade plan was down? Do you wait and say, well, it's still got hope, maybe and maybe it'll bounce here? I've already moved on to a successful trade. I've already taken the loss, and I already found the trade I'm supposed to be in, and I'm making money somewhere else. And I'm not staring at this loser. Maybe it comes down and kicks off of this. Maybe it comes down and kicks off of this, and all of a sudden, price is 15 pips below that, and I'm still losing money. What did I do all day? I got in a losing trade, and I watched it lose money all day. That's what you did for 4 hours? 5 hours of watching that loser trade get worse and worse? Oh, well, it went up a little bit, and then, it went up in a little... right? You're just a nasty old crab. The bottom of some Chinaman's soup. You should have been on a different trade, guys. Take the loss, moveon.com. because your trade was simply buy the roll. If that fails, go find something else to do. Take the loss. Oh, but Wayne, I was only doing minus 8. Wayne, I was only minus 18. Wayne, I was only minus down 20. Whatever, dude. Whatever. Either your plan is successful or it failed. Okay? Be on the winning trade, guys. Don't be in a trade. Be in a winning trade. I'd rather you take the small loss and then be in here, or wait for it to reverse and catch the pullback after that reversal. You see what I mean? Yeah, guys, you got like 90 seconds left and you're all freaking out. No, thanks for the heads up. So Challenger report, 41K. That's really good news, man. Okay. Challenger report, only 41,000, 61,000. Okay. But that was the worst in many, many years because so many people were getting laid off in industries related to the dollar and industries related to energy. So, you know, what is that? A 33% reduction in layoffs? Cool, man. Okay, news is coming out. By the way, let's check our price action on oil that I predicted in December. Well, it's kind of that's the, remember last week and the week before, higher, lower high, lower high off the 55, back into resistance, and then maybe down into here. Cool, man.
1 minute to the data. First quarter final non-farm productivity expected minus 3%. Unit labor costs expected at 6.1%. Weekly initial jobless claims expected 278,000. Prior was 282,000. Continuing claims expected 2.21 million.
Well, Mike, if you see the winning trades after the fact, that's fine. Print out your charts, draw the price action with a stinky felt tip marker, and then using your analysis, draw where you think price will be in the future using as precise price action as you can think. Even if you just say, you know, that. And then over time, see how it goes. But I draw price action all the time because I'm reminding myself. But I'm also practicing.
76,000, 2,000 lower than expected. Prior buys 2,000 higher to 284,000. Continuing claims 2.20 million is slightly below expectations. Non-farm productivity minus 3.1% is 1/10 lower than expected, but unit labor costs at 6.7% is 6/10 higher than expected.
Okay, as expected on everything. Okay, so like Mike, if you can see these orange lines to the left, I drew them before price went up there. That's why they're not perfect. That was my guesstimation that it would come up, it would come down, it would go up, right? All the way up though, then it would come down, then it would come up, retest, make a lower high, and then make a lower low. So not perfect, but that was my guess at that time. Practice, you should actually do that. But all of that was resistance that I identified in December. So here we are in June and we're shorting oil. Yeah, what's complicated about that? Okay. So that's how I'd actually do it. I would print out the chart, make lots of room to the right. Maybe print it out on a legal pad. That actually is a cool idea. Get legal size paper and print it out so 1/3 of the chart, or 1/3 of the printout is actually your chart with known price action, and 2/3 of it maybe is empty, or maybe the other way around. I don't know, whatever. And draw the future price action, and just do that over and over and over again. Do a dozen trades a day that way. Really look at them and really think there's something different about holding the piece of paper. It's a different, it might, your brain might accept it differently than just staring at a computer screen. There's something about paper, it's like reading a real book, for example, versus your Kindle, if you do such a thing. I don't even know if they have Kindles anymore. But you know what I mean? There's something about a book, something about paper that humans like. So print out a chart on paper, and using to the best of your knowledge and abilities with a stinky felt tip marker. I want a big, stinky, permanent marker. The stinkier the better. And actually draw out the future price action, and then you have it there for watch it over the next 24 hours, right? So you watch the next 24 hours worth of 15-minute candles. I do this all the time. I don't do the printout stuff anymore, but you should be in the habit of doing this all the time. Okay? No, I'm not asking you to draw what did happen. I'm asking you to draw what will happen. 15-minute candles over the next 24 hours. I would do 10 different currency pairs at least, and over time you'll get better. It's easy. Do that for, I don't know, a year if you have to. I don't care. You will get better, or there's something else for you to do in our society. Maybe you're a ditch digger. I don't know. Yeah, well, we need to try it. We need to shake things up because we need to reprogram your brain. You're sometimes very confusing because you're willing to work hard. You've proven that, right? You take my advice seriously, you live through it, and you have this optimism, but at the same time, you're one of you have the most doom and gloom at the same time. With all that positiveness, you're a doom and gloom guy, man, and you're a rarity in that way. So you're just a complex person. You're probably overeducated, and you're probably emotional. So let's say you have mommy issues, and you're trying to impress your daddy that maybe wasn't around. I don't know. We all have that. See, Daddy, I have a PhD. Don't you love me now? It happens, man. Now, don't get mad at me. We all have our thing. We all have our baggage. We all have to carry that with us. When you're a currency trader, you need to be transparent with yourself, and it's difficult. So you have to figure out why you work the way you work. What you and I are trying to do is reprogram. Okay? We need to reprogram the way you think. That doesn't sound easy to me. And so that's why we need to do things like change what parts of your brain that you're using, and we need to rewire all these things. And emotions are part of it. That's why I piss you off sometimes. Well, I'm talking to a different part of your brain. Now, let's work on the tactile and visual parts of your brain, right? Print out the piece of paper, get a stinky marker. That's important for your olfactory senses. And I want you to draw out on paper the next 24 hours of what you think the price action is going to do based on technical analysis and price action theory. Do that for, I don't know, 5, 10, 20, I don't know, as many as you want. It's your life. Put it on the wall, and then maybe at the end of the day, print out what actually happened and see what you did right and what you did wrong, and actually create a list. What did you do right? What did you do wrong? Mark on the, when you're planning out your next 24 hours, look at a calendar for that currency pair and say, hey, this is a British pound. Is there any British pound related news on the calendar in the next 24 hours? If so, write that down. So make a note on it. You know, did the news confirm the existing trend? Did the news go against the existing trend? If so, how did that impact the price action? When when you were right, how far did it move? When it was wrong, how far did it move? Did it reverse? How did it reverse? Just I would take notes and study. Because like I said, you seem, right? You seem like you might be an intellectual. Fine, then intellectually study it and take absolutely incredible detailed notes. Guesswork is irrelevant. Remember, Forex somehow knows. When you're prepared and you do the work, it knows. When you guess or you throw down a trade because you're chasing price, you get slaughtered. It's that easy. Right? So let's work on reprogramming your brain. That's all. That's all we need to do, Mike. And that goes to everybody. If you're not willing to do that, I don't know. I'm willing to do whatever it takes to succeed. Whatever it takes, I'll work harder. Well, that's me. I'm weird that way. So I have my own mommy issues. I have my own daddy issues. And what I've done over the years is I've tried to refine my strengths. I know in some cases I've turned weaknesses into strengths, and other things I've learned to deal with and at least understand and recognize. And then I work really, 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 really hard. That's how I do it. Right? Oh, good job, Greg. So I hope that's helpful, guys. I mean, all of this is important. Knowing both where the bulls and bears are going to trade. Because remember, if you're a bull and you know where the bears are going to sell, let's say you say, oh, well, I'm going to buy it here at my 382, but I think it's going to go up to the bearish 618, and that's where the bears are going to sell. Why wouldn't they? That's the 618. And it's near whatever other level. So that's where I'm going to, I'm going to move my target to that. You don't have to sell there. You could, but you don't have to. But understanding where bulls and bears are trading is very important, because once even if you're not trading, right? If all you did was identify where bulls would buy, and that's support, and where bears would sell, and that would be resistance, and where support and resistance changes depending on whether it's a bullish trend, bearish, or sideways trend, right? And once you get really good at anticipating these levels, the only thing that you need to do is decide if you're a bull or a bear, or if you want to swing both ways like a broken gate, admit it and say that you're shorter term trading and you're going to take all swings. But it's a little trickier. I wouldn't do that from day one. But if you know where the bulls are going to buy, you can buy that, and if you know where the bears are going to sell, you can sell that. It requires patience and requires discipline, because eventually you're going to be wrong. You need your losses to be small. But I think it's important. That's why we talked about it the other day, understanding where support and resistance is. So tomorrow, 7:30 in the morning, New York time, we need to create a trade plan for non-farm payrolls. Okay, and that'll be at fxstreet.com. Let me see if I can get you a link for that. I believe it's my 109th month of trading non-farm payrolls live. 109 months. How many years is that? Let's see if there's a link here. 9 years? It's a lot of them. No link on their homepage. Oh yeah, here it is, right on the home at fxstreet.com, trade non-farm payrolls, 109. Let me pull this up. There's only 443 people registered. So there's still room for you if you want to attend. Cool, huh? So I'm going to be over there, help you out, man. I think it'll be exciting. It's a 3-hour webinar. So there's lots of time to, like, you know, talk about whatever you want to talk about. But we have to prepare for and then trade non-farm payrolls. And I believe we got Canadian jobs as well and blah, 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 blah. But that's me. Hello, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. Yay! So I'll see you there tomorrow. Hey guys, again, I'm sorry if I sounded crabby today. I'm just, you know, there's my sob story. You know, I don't know. I'm trading at, you know, 1 o'clock in the morning, 2 o'clock in the morning, 3 o'clock in the morning, 4 o'clock in the morning. I'm trading, so I only get cat naps here and there. So sometimes I'm crabby at the end of the week. But I just want to say I love you. I care for you. I think you're special. I want you to succeed. And I will see you tomorrow for non-farm payrolls at fxstreet.com. And thank you for being a client of TradersWay. I hope these sessions are helping. Well, Mike, I think you have the potential. So we need to turn your negativity off. And the only way to do that is to replace it with not fluff, but with hardware experience that your brain believes in. And that's why you need to do all those things. Okay, Mike? Just simply need to reprogram your brain. And your brain, if you do it and do it long enough, your brain will actually physically be different. You could take a picture of your brain today, and maybe in a year, it will be different. Your synapses will change. Rana, don't compare people with that. I'm sorry, Rana. But you know, Rana, you'll remember that story, won't you? And that's really what I'm doing. That's called neuro-linguistic programming. People forget, you know, probably 95% of everything that they experience, they forget it. Okay? So if I can do something or say something, even if I make you mad, like pushing Mike's buttons, even if I make him mad, he will remember, or he's more likely to remember. Right? And same thing when I tell stories, you're more likely to remember like think of it. I talked about the old Chinese man squatting 25 feet above the water at the edge of the pier. He's got a mole with hair. I'm drinking my rice latte, eating my $9 salmon sandwich, right? You will remember that. You will remember that, right? You will remember that 10 years from now. What I said yesterday, you already have forgotten. And that's important. So I'm doing my best to help. Well, then draw the charts by hand, Mike. Yep. So peace on earth, may the pips be with you, may your profits be above average. Have a great trading day.